If your company is really intent on doing fraud detection, make sure that you're doing investigation and analysis and not just math. For example, if you're looking at 5 minus 2 equals 3, that's just business planning. That's not really fraud detection. If you're looking to see if your account's balanced and if the same amount came out that was supposed to, that's just math. Finding out why 2 is not 1.8 is really strategic. So 5 minus 2 equals 3, okay, that matches. But look to see if that number 2, or the amount that was taken out, is the right amount. Because accountants just do math. Investigators do analysis on the numbers to make sure the numbers are right to begin with. That gets into fraud, and even growth planning comes from that. If you're looking at the numbers, even if you're not discovering fraud, you're finding ways to help grow your company in areas of improvement. That's where metrics and KPIs come in. You can also do back testing. You can find out if the same numbers appeared on prior quarters or prior months. If you know that your gross profit percentage is, let's say 52%, and it's always been in the low 50s, but if you find out that 2 years ago it was 65%, that might be an area where some additional expenses are coming in or some revenue is going out. That's both fraud and growth planning. If you're using very specific results, you can employ metrics such as Benford's Law to make sure the numbers are correct and the percentages of the appearance of digits is correct on your spreadsheets. Accountants will look at math, and they'll look at whether or not proper accounting procedures are employed on the spreadsheet, on the profit and loss, and on your tax returns. An investigator will look to make sure the numbers have a reason behind them why they exist, and they're going to look for smoke that might indicate underlying fire.